of course, we have the Brexit expiration date. More and more expectations of a hard Brexit. What's your take on that?
Well, we are preparing ourselves. If I look at our plans, de facto, whatever solution is coming now that may make it a little bit softer is de facto no longer relevant for us, because we have, a few weeks ago, basically we had to make a decision, to go and execute for worst case scenario. So de facto, I would say the financial system is already operating under the assumption that there is no agreements, and so whatever is going to happen from now onwards is not going to make the exercise less expensive, is not going to make the feeling about the disconnect that there is out there in resolving those kind of issues not very high. We go back to what we started at the beginning. So it's a complication that undermines, the willingness also to make investments. If you don't know what's going to happen, how can you start to invest? And I think I would say in the UK and in general in Europe, this has been something that has prevented people to take actions and invest for the future.
Is it confirmed that Frankfurt will be the choice for you?
Yes, confirmed. So I think that we have an existing operation in Frankfurt, and but our choice is to have multi-location strategy, where Frankfurt is going to be the base of with branching out. So we're going to have some people are going to be located in Madrid, in Paris, in Milan, and also a good chunk is going to go to Frankfurt.
There's expectation out there that a hard Brexit could lead to the next banking crisis. What's your take on that?
I think the system is well prepared. First of all, I don't really believe that the next crisis will be a banking crisis. I think if you look at the banking system, it's very resilient, and of course you may have some banks here and there, like in the past we had insurance. The insurance sector was also part of the problem. So, but I understand that the financial system is much more resilient and ready to absorb any shock. I don't believe that the Brexit can be a triggering for a financial crisis or a banking crisis, but it could undermine investments and trigger maybe a slowdown in the economy. That's clear. Yes.
Earlier we talked about China. I want to talk about JVs in China. Of course, major banks are looking for that license to own more than 51%. How is that going along? What's the status of negotiations?
Well, I think that we have completed de facto our negotiation, and we were the first bank to file for the authorization to go above 50%.
Will you be the first bank to receive the license?
That one is not in our that is not in our control. We have been, as you know, in China, starting with QFII in 2003, and later on in asset management, and then with our securities business, we have been a pioneer in local presence in China. So we were the first one to file for the authorization to go above. We will see. But this is showing our commitment to invest for the long run in China, and hopefully the situation can be resolved in the next couple of months.
Do you suspect that American banks will be at a disadvantageous position given the increasing tensions between the U.S. and China?
Well, they don't.
Does it give you the upper hand?
American banks, they don't seem to be under any disadvantage nowadays. So I have a hard time to believe that's the case.
Now, we've talked about the challenges facing the global economy today. We have Turkey versus the strong dollar versus the U.S.-China trade war. In your view, what is the biggest risk, one, for the banking sector, two, for the global economy?
Definitely the trade tensions, because although we are optimistic that if you look at U.S., EU, U.S., Japan, most likely some solution will be found. I think that on the China front, things can get worse before they get better. And in any case, even if you have a resolution of with other countries, between the U.S. and other countries. Tensions between China and the U.S. is enough to create second effects on the rest of the economies, and so all the exporters into China and into the U.S. would suffer. So I would say that by far, I would say is the trade tensions that can trigger a slowdown in the economy, and therefore further pressure on the potential on currencies and a ramification into emerging markets.
And for the banking sector, the biggest risk?
The biggest risk nowadays in the banking sector, I think it's not necessarily, I would say, is outside the banking sector, is the shadow banking sector, where if there is a dislocation in financial markets, it remains to be seen how it's going to be addressed.
Of course, the disruption by technology, we're talking about how fintech companies are increasingly disrupting the space. Is UBS in a position to cope with the changes that are coming?
Look, the banking industry has been able to cope with technology changes for 2 or 3 decades now. I am pretty convinced that when you look at UBS, but other banks, the future, it may well be that some new entrants will step in and try to capture part of the value chain. But at the end of the day, incumbent banks, some incumbent banks will emerge as winners. I'm convinced UBS will be one of them. We are constantly investing in technology. You look at client experience, you look at the dimension of having better products, faster execution. But the battleground in technology, everybody loves to talk about fintech, but sorry, the battleground is on the back end, the back office. How do you make yourself leaner, faster, more efficient and effective in the way you serve clients, but also at what cost? And that's where also we make a lot of investment. So we keep a very diversified approach on technology. And last but not least, technology development is an evolution. It's not a revolution. It is going to take time.
One quick final question. Would fintechs require greater regulation?
I think so.
If they're going to act like banks, should they be regulated like banks?
One would hope so. Particularly, history tells you that those things are usually done after some things not so nice happen. So you will probably need to see some issues emerging from fintechs and people that are de facto doing banking business without license to create a necessity to intervene. I have a feeling that we already reached that point. So people are much regulators and even at legislative level, people are starting to look at not only what people are doing in banking services, what are they doing with data. A bank is not allowed to do even a half of what some of these social media and technology companies are allowed to do with clients' data. So this is really an unlevel playing field that needs to be addressed.